Welcome to the Recon Trader. In today's video, we will take a look at the Bitcoin price now that it appears the bears have taken full control and the bulls do not appear interested in engaging with the bears with any type of meaningful volume. So let's jump right to the charts. Now the first chart we will take a look at will be the 1 hour candles on Binance for Bitcoin USDT. And I had been watching ever since Bitcoin broke down below this 32,000 level a few days ago. The bears continued to try to push the price down below 31,000, and the bulls were defending the 31,000 line in the sand and pushing the price back up to 32,000. However, it was with very little volume, and the bears had no problem pushing the price back down to 31,000. Bulls step up to get back to around 32,000. Another bear attack down to 31,000. The bulls again get rejected at 32,000, and the bears are able to get the price back down towards 31,000. At which point the bulls do appear ready to join the fight, and they actually push the price up to 32.4, only to have the price pull back in this long wick on this 1 hour candle, and then followed up by this bearish doji candle, was a clear indication that the bears were about to take control, and they did, and push the price right back down to this 31,000 level. The bulls do defend, albeit again on very weak volume, and get the price right back up to 32,000 to once again reject. However, the bears are able this time to breach the 31,000 level, and perhaps now 31,000 may become the new 32,000, as we can see the bulls get rejected at 31,000, and there is a possibility that the bears could then push this price down to 30,000, and we could perhaps see the same choppiness between 30,000 and 31,000 for the next few days. Now, if we jump over to the daily candle chart, you can see Bitcoin is in a downtrend, and as such, the bears have had control pretty much since mid-May, when they originally drove the price down to 30,000. And at that time, we actually did see the bulls step up and push the price right back up into the 42,000 level. However, since then, we have seen the bears push the price back into that 31,000 level and below. The lowest we got was 28.8. And again, the bulls do show up, but on declining volume. And in reality, this green bar of volume includes a lot of volume on the push down to the 28.8. So a lot of the volume represented in this large green bar is actually selling volume rather than buying volume. So you need to take that with a grain of salt. And a very important line in the sand that we have been watching is the 618 Fibonacci level. And while we may have wicked below that level or right to that level a few times over the last couple months, we've not actually closed below this 618 level, which is right at $30,459. And we are getting real close to breaching that level. If we do breach this level, there is a probability of this price retreating all the way down to around the 22,000 or 21,000, which would be the 786 level of the Fibonacci retracement tool. Now, with that being said, at any time, the bulls can reverse this price action and push it up. However, without any volume behind their moves, this price is more than likely to continue down. Now, if we jump over to the 1 week candles on Bitcoin, there is a red alert now that we have actually closed a weekly candle below this yellow line that is represented by the 50 weekly EMA. It had been acting as support, as you can see through this level here. We had not closed below. We had wicked below a few times. However, it was acting as support. The close of the weekly candle yesterday, it crushed down below that 50 EMA level. And I think it goes without saying that is extremely bearish now for Bitcoin, which is clearly represented by the price action we're seeing today, albeit it's the first day of this weekly candle. But we are again dangerously close to breaching that 618 level right at 30,400-ish. And if the bears are able to push the price down below that 30,000 level, then we're looking at 28.8 After 28.8, we may find support around the 100-day moving average, which would be right around 25,000. After 25,000, we could clearly be headed to the 786 level of 21,000. And again, as I've said in the past, 21,000 would not be out of line, as that would basically be revisiting the previous bull market's all-time high. And a lot of bull markets will actually revisit the previous bull market all-time highs, and we've not actually done that in this particular cycle. So it's not out of line if we were to reach down to the 21,000 or 20,000 level for Bitcoin's price. And if we do see a decline down into the 20,000 level, that could be the decline that actually puts us into a bear market. As I have referred to this bull-bear cycle graph in previous videos, we clearly saw the accumulation of the current bull market. We have definitely seen a markup. Now the question really is, are we in the distribution phase after the sell-off to 30,000? And in my experience, this appears to be the stage we're currently in before the decline into a bear market. As you can see, we had the accumulation, we had the markup, we've now had the sell-off, and we're now moving sideways into perhaps what might be considered the distribution phase. Now, if that is the case, we can fully expect a bigger sell-off, and that sell-off could push the price down to 21,000 or perhaps even down to 12,000, which would be pretty much the start of this current bull run, and again would not be out of line for a bear market to push down into this 12,000 zone. And for that to happen, it could take the bears the remaining months of the summer to push that price down. And if that does happen, we could see the bulls step up come fall or maybe winter if the bears go into hibernation and push the Bitcoin price up to all-time new highs, perhaps around December of 2021 or maybe January or February of 2022. And so it's not all doom and gloom. In reality, it is part of a healthy market cycle. We can't just go straight up. Now, on the flip side, if we're not headed into a decline and a bear market, the bulls need to step up pretty much now. They need to push this price back above the 50 EMA, which would be around 34,000. From there, they need to get above the 50% Fibonacci level of 37,000. After that, the bulls would need to push above these wicks on these candles, which is around 41,000. From there, the next level would be the 382 Fibonacci level, which is around 43.5 to 44,000, which did act as previous support and more than likely will become resistance on the move back up. But if the bulls are able to breach this level, then we could be looking back at all-time new highs and a continuation of the bull market. However, unless the bulls show up with any meaningful volume, this downtrend is more likely to continue than to reverse without any type of bullish volume. But for now, the bears are in complete control now that they have pushed the price down below the 50 EMA, and this appears to be a setup for a further decline and perhaps the confirmation of the start of the bear market. Alright, that pretty much wraps it up. So if you like this video, do me a favor, spike a like. If you're interested in building wealth by investing or trading crypto assets, now would be a good time to shoot that subscribe button, because those are the type of videos that I create. If you have any questions or comments, feel free to drop those in the comment section down below. And remember, never send your money into battle without first doing your recon. See you in the next video.